Hi, my name's Frankie. I'm the founder of Frankie's, a financial education network dedicated to empowering you have the confidence to be bold with the financial decisions that you're making. And this is season 2 of Talking Frankly with founders and investors. In each episode, I get to speak with entrepreneurs and investors about their own financial journeys, whether it be seeking investment opportunities, fundraising, pitching, scaling businesses, all whilst juggling managing their personal finances. Through their stories, we get to find out more about how you can be making the right decisions with your own personal finances. In this episode, I am joined by Jinesh Vohra, co-founder and CEO of Sprive, an innovative app that leverages open banking to help millions of homeowners pay down the interest on their mortgages faster. After 14 years at Goldman Sachs, Jinesh took the leap and left the corporate world to launch Sprive, driven by his own personal mortgage journey. Today, he gets to talk to us about the journey to setting up the business, what he's learnt, and how you can be better managing your personal finances. Jinesh, can you tell, absolutely delighted to have you today. Thank you for joining us. Can you tell me a little bit about Sprive and your journey to creating your business?
Yeah, so I'm a quick intro on myself.
Yeah.
Might be helpful for the audience. I'm Jinesh Vohra. I'm one of the founders and CEO at Sprive. My background is investment banking. I was at Goldman Sachs for about kind of 14 years, and then decided to kind of leave that world behind to start Sprive. And we're essentially a mortgage management app. Is probably the best way to describe us. There's about 11 million homeowners. Most of them borrow hundreds of thousands of pounds over a 25 to 40-year period, and so customers really come to Sprive to try to help them pay off their mortgage as quickly as possible and save as much interest without impacting their lifestyle. And we do that in a few different ways. We help them squirrel away spare cash, and they can make one-tap payments to their mortgage lender. We have this concept called Shop with Sprive, where you can do your everyday shopping. We work with brands like Tesco's, Asda, Sainsbury's, Morrison's, Amazon, Waitrose, and the list goes on. Every time you shop through the app, you get money towards your mortgage. We scan the market every day for better mortgage deals. So we support over £3 billion worth of mortgages. Collectively, our user base is on track to save something like £118 million in interest. So yeah, pretty impactful.
Amazing. And did you always know that you were, how did you know when you were going to start the business?
So I've always liked the idea of starting my own business. So give you some context, my grandfather was an entrepreneur, my dad was an entrepreneur, and so I always liked the idea of starting my own business. But then I kind of went to university, got my corporate job, got into banking, and then you kind of start chasing kind of the corporate ladder. And then one day, a colleague of mine grabbed me and was like, "Look, I'm leaving the firm. I want to start my own business." And I had the kind of inkling that I should kind of sit down with you and see if we want to do something together. And so literally after work, we'd brainstorm business ideas. And we kind of started in the kind of the summer of like 2018, and then we came up with the idea of Sprive in like November. And it was partly born out of my own personal mortgage journey. My wife and I bought our first home about 12 years ago. Vividly remember seeing the mortgage offer document, and it's saying for every pound that I borrow, I'll be paying 50p in interest.
Okay.
So we were due to pay about £150,000 in interest over the lifetime of the loan. We didn't really like that idea, and so
Yeah.
we went through a journey of aggressively trying to pay off our mortgage. And then very quickly we realized that actually lenders don't necessarily want you to become mortgage free any faster. There's lots of it's very traditional in terms of the way the mortgage market operates. We just felt like there was a huge opportunity to kind of innovate and disrupt. Yeah, took the plunge and left that world and built Sprive.
Amazing. And you'd mentioned there about your grandfather and your father. What businesses were they running, and how much do you think their own careers and their journeys and seeing them run their businesses impacted you in your decisions that you've made?
For sure. I think when you see kind of your family being entrepreneurs, that makes you a little bit more comfortable to kind of take the leap. But to give you some context, my grandfather grew up in kind of rural India, and grew up on a farm, no education. At 12 years old, decided to leave the farm and go on a boat with his uncle to East Africa in Kenya. And then worked in construction. And then from when he worked in construction, then when he was in his 30s, decided to start his own construction company. And through that, started getting clients and building wealth, and was able to then send my dad to boarding school when he was younger. And then he had a very good education, relative to where he came from. And then he decided to come to the UK, but he didn't really know anyone, and he literally came with like £5 in his pocket. And then again, initially when he started, he was like working like 2 or 3 jobs, and he was like, cleaning toilets and working at Asda and things like that. But then he started his own accountancy firm, and then from that, he kind of there was huge amount of community that came in that you know were needed help around kind of their finances.
Yeah.
And so he built that business up, and then he did that well enough to be able to send me and my brother to private school, and then obviously that gave us an even better foundation to be able to kind of go to university and then start working at Goldman Sachs, and then here I am
And
now.
here you are.
Yeah,
And
yeah.
what an amazing story. And when we've spoken before about the you launching your business and the fact that you were able to do it from a point where you'd started on your own financial journey, you'd got some financial security, and it was driven by you wanting to pay down your mortgage. How important do you think as a founder it is to have that level footing before starting?
I think it definitely does help. I mean, a lot of the founders that I meet are a lot younger than me. I'm now in my early 40s, and I think if you're young and you've got like a little bit less commitments, I think it's easier to be able to take the risk. As you get further on in your life, you start to have more commitments, and a mortgage is a big commitment, right? Like
Yeah.
the lenders don't really care if what you're doing. You need to be able to earn enough to be able to pay your monthly payments, otherwise you lose your home. And especially once you get married and you have children, you have other responsibilities, and it becomes harder and harder. And so for me, it was really important because I always like the idea of starting my own business,
Yeah.
but then you also get really focused on your corporate life. But I like the idea of being kind of financially free, and
Yeah.
so not having a mortgage meant you change the way you completely think. And I'm pretty sure that if I had a mortgage right now, I don't think my wife would have ever allowed me to kind of quit that job, and she would have been like, "Carry on. You've got commitments. You've got
Yeah.
responsibilities. Keep earning, the income that you have." And I think mentally you think very different when you're mortgage free, and
Yeah.
you're a little bit more control of your finances. You're willing to take bigger risks,
Yeah.
and with obviously bigger risks, can be transforming returns. I think when you have a corporate job, the upside of that is very, very known.
Yeah.
But when you're an entrepreneur, the upside is
Yeah.
unlimited, and who better to back than yourself?
Yeah, exactly. I mean, I often say that when I started my business, I felt like an entrepreneur doing the splits because I already had my community, but I was working for a wealth management firm and I was getting that salary, and taking that leap was quite difficult, but it's been the best thing I've ever done. So I think for anyone listening to this who's thinking about taking the leap, I think we're both testament that it's worth jumping off the cliff for it. I want to turn back to you having the meetings with your co-founder, and you get yourself to the November where you've decided to launch Sprive. What were the first steps that you took in terms of, were you bootstrapping? Did you go out to angels? How did you start to get the business off the ground?
Yeah, so I mean, we spent about 7 months validating the idea, because for me it was obviously leaving the corporate job, and which paid well. I had to make sure that it was worth the risk,
Yeah,
and also you have an idea, but bringing an idea into reality, you need to make sure that before you trust and try to convince investors to be able to put capital into the business, that you truly believe in the idea. And so we went through a process of really kicking the tires, and I'll give you some examples of the kind of things that we did. So one of the things we did is we created a website, and we created a wait list, and we said to customers, this is what we're planning to essentially build, to see if people would be interested in what we were thinking the product should be, and the solution should be, and the problem that we're solving.
yeah,
Because I find a lot of people think they are solving a problem, but actually when you really go into the surface, it's a problem that maybe you support,
yeah,
or it's a very small problem, but it's not actually a
yeah,
big problem that's going to really kind of transform. Ultimately, what I'm trying to do is transform the mortgage industry.
yeah,
And very quickly, we had like 2,000 people sign up to our wait list, and that was a kind of good indicator that customers really felt and resonated with the problem,
yeah,
and that the solution kind of they something that they connected with. Then there was almost like, how do we build this thing? Because for me, it was really important that we were able to facilitate one tap payments to your mortgage lender. I really felt strongly that if you start asking customers to download an app, and then ask them for like their mortgage information, their balance,
mm,
and then have to like manually do things, and it's very, very clunky, then you're not gonna get people to be able to do that.
yeah,
But unfortunately, like, the information isn't publicly available to be able to like facilitate one tap payments. So there was a lot of conversations. It took me 9 months to be able to like work out how we would actually be able to facilitate these kind of one tap payments. And it was really important for me that we had the big lenders,
yeah,
because 85% of the residential mortgage market sits with these kind of 14 lenders. And so if we couldn't get the big lenders like the Barclays and the Santanders and the
Yeah.
HSBCs of the world, then we were going to be a very bespoke application, and that wasn't going to really work. And so that we spent a lot of time doing things like that, getting validation from like the mortgage industry. So I remember when I was in my corporate job, there was a mortgage firm that they partnered with. So if any employee wanted mortgage advice, they would go and get recommended to this company, and they were doing a workshop
Okay.
and inviting employees that wanted advice around their mortgages to come and ask them questions. And I didn't really have any questions, but I went there because I knew he was on the kind of the C-suite level at that firm. And at the end of the session, I grabbed him and said, "Look, I've got this idea that I want to do outside Goldman's around mortgages. Do you mind like grabbing a coffee and seeing if there's legs to the idea that I have?" And we met, and he loved the idea so much. He was like, "Can you meet my board, and can you just kind of present what you kind of told me?" And then there were conversations around, can we invest £500,000 into the business? And the more I spoke to people in the mortgage industry, the more they were like getting really excited about what we're doing. And at this stage, we just had essentially a PowerPoint.
Okay.
And then as I started talking to people, people were like, and going through, and explaining the journey that I was going through, people were like, "Can I invest?"
Yeah.
And it got to a stage where just on a PowerPoint, we'd not built a line of code. We had like £240,000 of investment,
Amazing.
including like the likes of the former CFO of Microsoft US and India. And they got to a stage where I was like, "You only live once." All the different points felt like this was something that we really kind of believed in. And so yeah, I took the leap and quit the job and started the company.
It's amazing how important network is, and having the confidence to go and link up with people and talk to people. Your background at Goldman, was it more technical? Kind of what were you doing there? That kind of talking about coding and different things. What's your kind of skill set?
Yeah, so I can't code at all. So my first 10 years was supporting the security trading business, but essentially what I did is I managed teams, small teams to begin with, and as I got more senior, the teams got larger. But it was essentially helping them execute on functions and processes that essentially the business needed to make sure happened
Yeah.
to facilitate their business. And so I got very good at like on one side you have like the clients
Yeah.
and making sure you're managing the clients so they're very happy. The second time is second part of the role was very much around the technology
Okay.
and making sure the technology worked, but also improving the technology over time
Yeah.
and making sure that things ran efficiently. So you've got people doing manual tasks and making sure they do the manual tasks effectively and on time,
Yeah.
and again trying to do that in a productive manner. And so that kind of the first 10 years was very good for me. I was essentially managing a business,
Yeah.
but within a corporate environment is probably the best way to describe it without getting too technical and
Yeah. Yeah.
boring your audience. And then I moved over to the risk division, and the risk division is very much focused on helping the bank not lose money.
Yeah.
And so my job was very much focusing on, and I looked after a third of the organization at Goldman Sachs globally from a risk standpoint. So I was really identifying where the bank could lose money, and then coming up with strategies to be able to prevent them from occurring in the first place. So then my relationship was very much it was much more a relationship type role
Yeah.
as well as a technical role. So
Okay.
having the relationships with the partners and the managing directors within each of the organizations that I kind of looked after, and having that dialogue around what are the things that could go wrong,
Yeah.
how much capital do we need, when do we deploy it, how do we deploy it, and kind of that was kind of my role. So it was kind of I had a nice hybrid of like technical as well as kind of relationship side
Yeah.
of things and kind of managing stakeholders and clients, and problem solving was another big part of it. Like no one really told me, especially as I got more senior, what to do.
Yeah.
You created the work for your team, you created the strategy, you did the recruitment, you allocated you get given a budget, you allocate it, and again, so you're very much kind of an entrepreneurial type feel,
But
but
within that
within
corporate.
that kind of safe kind of
And how,
corporate
and
bubble.
how did you find that transition then? So obviously you've had this experience and 14 years of working in that sort of environment, but with the backdrop of Goldman Sachs behind you. How did you use those skill sets in launching Sprive? And what would be your kind of top three things that you'd recommend to founders when they're putting their team in place?
Sure. So in terms of like the skill sets, I think you need to be really resilient. I think that's really important because starting a business is tough, especially when you're creating something from scratch, like we're doing. We're creating something that no one's ever created before, and so you've got to like for example, you'll have conversations, and then you'll be ignored, and you're trying to create something out of nothing. So a lot of networking is really, really important, and then be able to hustle and grind. And I remember like some key kind of conversations we had where twice we've been told no, we won't work with you, etc. But you keep persevering and you try to like knock down doors. And so I think
Mm.
being able to do that, I think it's super important. I think being able to like sell, and bring people with you is really important as a skill set as a founder. Whether you're selling to clients or you're trying to negotiate partnerships or you're trying to build a team, a lot of the times you're trying to find really good people, and they've got to believe in you that you have the energy and the drive and the know-how to be able to essentially disrupt. Ultimately, the mortgage industry is a £1 trillion industry,
Yeah.
and so I've convinced really talented people to leave amazing jobs to work for me. And again, when you're obviously raising capital, on the investor side, people are essentially investing in you,
Yeah.
especially in the early days when there's very little to in terms of evidence, in terms of you can actually make this happen. And so having that kind of that personality, when people look in your eye and go, I think Jinesh can do it, is so so crucial. And then I think the other third probably trait is being kind of hyper efficient,
Yeah.
because you only have so many hours in the day, and if you're a busy fool, that can kind of really hurt you. You kind of need to be ruthless around how you spend your time, how you spend your energy. And I see sometimes founders trying to do too many things, and sometimes they network too much,
Yeah.
and they're not meeting the right people.
Yeah.
And if you're not meeting the right people, sometimes then
It's just
you're
wasting
you're
time.
wasting time and energy.
Yeah.
And with kind of startup life, you need to be you have very little in terms of capital resources
Yeah.
compared to like the bigger firms that you're trying to essentially compete against. And so that is a really important trait. And obviously I can talk about more around how we kind of built our team up, but I say those are the kind of the three best kind of like attributes I'd say. In terms of the team itself, you've got to be really clever around what what is the skill set you need, from the founding team, but then also your first hires, to be able to make sure you've got enough to be able to like enter the market, build your first product, and essentially and then monetize, and then as you get more traction, as you get more capital, you can grow out the team. And so I was very like careful. Like we had two co-founders initially, that I mentioned. We
Mm.
both worked at Goldman Sachs, and then we needed a CTO because none of us could kind of code.
Okay.
And so we then came up with a process, and we found our CTO. And I can tell you more about that story. But and then we said, well, we're a consumer brand. We need someone that can do marketing. And
Yeah.
again, we went through and we found our first marketing lead. And finding talented people is can really key, because your early hires, if they're not good, can
Yeah.
completely destroy the company, as well as the founding team, because the founding team have to really like work together well,
Yeah.
and they need to complement each other, and they need to be able to challenge each other.
Mm.
And again, if the
In a
dynamics
constructive
in a
way.
constructive way, and
Yeah.
if the dynamics are not good, then again, I've seen so many companies that have failed because the founder dynamics aren't right.
Yeah. And earlier you spoke about the kind of you had 240,000 that you managed to raise from your PowerPoint, which is incredible. And then so what then happened on the journey? So earlier you mentioned you've got about 80 investors on your cap table, and you're going through a funding round at the
I
moment.
am, yes.
How can you tell us a little bit about the journey to the money that you've raised
Sure.
and how it's developed? Because I know you're talking to more family offices and funds now. So how have you found that transition in pitching and fundraising?
Yeah, so initially, like the first 240,000, that was very what I call a friends and family round. But what I'd essentially told is each of the founders need to bring in £80,000 through their own network, three co-founders, and so being able to like leverage each people, it just makes it a little bit easier.
Yeah.
And we were all able to just talk about what we were doing. I feel like when you're raising in the early stage, you don't go to your friends and family and say, "Give me money." You really just get them really excited about what you're doing, and then they tend to ask you, "Can I be involved?"
Yes.
That's the kind
Yeah.
of dynamics that I've always found. I've never gone out to anyone and said, give me money
Yeah.
on raising capital." At least in the early days. And we were fortunate that because of my background, like the former CFO of Microsoft US and India wanted to invest. And so when you start talking to other people saying he wants to invest, then that gives them the confidence to say
Yeah.
like, well, I like Janesh. He's taking the risk of giving up, a six-figure salary at a good corporate job. I know he's really talented. I've worked with him, or I know him, and he believes in it. On paper, I love the idea. And then validation from someone that's like a name
Yeah.
really helps in terms of people to start to get FOMO and not don't want to miss out. The fact that you're, as a founder, you're quitting your corporate job is a big sign of confidence. But also we put our own capital in, and again,
Yeah.
putting your own money in is a sign that you really believe in this. You're not only giving up your time and sacrificing your income, but you're also putting your own capital, and that is kind of really important at the early stage. Once you have that money, you've also got to like and build a product,
Yeah.
because especially when you're disrupting the mortgage industry and you're building a fintech, it requires capital. It's not one of those types of companies where you can really bootstrap, because ultimately when people sign up, you're creating like, you know, accounts, and you're
Yeah.
moving money, and we process millions of pounds of payments, and the
Yeah.
security, and there's
Yeah.
verification, and all the stuff that comes with an app, building an app like ours. And so we built the app, using that capital, and we launched. And on the first week we launched, we got featured by This Is Money, and there was an article that said something like Sprive, mortgage overpayments app, is it any good? And within the first day we launched, we had like 2,000 people download the app. And that was like, wow, this is fantastic. And as soon as that happened, I was like, we need to raise more capital, because we were still not generating revenue, but we'd evidence with the initial capital that we've got, that we built a product that people wanted, we had customers. And so then we went out to market, and we were looking to raise about 1.2 million pounds, and we were oversubscribed. We ended up closing like 1.45 million, which was really nice. We had to end up saying no to investors, because every every pitch that I did, it seemed to people like people just wanted to kind of invest in the business, and that was really exciting. And again, the way that happened is through my network.
Yeah.
During the time when we were building, not only do you have to build your network.
Yeah.
When you're in that corporate job, it's easy. You have a directory. If you want to speak to a lawyer or a tax person or whatever you want to speak, they're just one click away. You look
Yeah.
up on the directory, you see who the person is, and you give
Give
them
them
a
a call.
call. But when you're moving away, unfortunately, given the role that I did, especially when I was in risk, they're not entrepreneurs. Very few people go away and leave that corporate job to start,
Yeah.
your own entrepreneurial venture. They all think I was crazy. And so, in that time, I'd built that network. And so again, reaching out to people, and then once you get people saying I want to invest, they know people, and then
Yeah.
it just has like a domino effect. And so, that was really fantastic. And then we took that money, and again, we were pre-revenue, and then we use that to then grow the business, add more customers. But then market dynamics change as well. You need to react. So when we started the app, it was very much a spare cash, towards your mortgage. There was no like shopping element
Okay.
to Sprive. But then interest rates rose from like 0.25%, the Bank of England rate, to like 4.75% now.
Yeah.
And so we started to kind of, when you talk to your customers, not everyone's got even that spare cash. Even sacrificing that coffee a day for some people
Isn't feasible.
isn't
Yeah.
feasible. And so then we had to build Shop with Sprive,
Yeah.
and then trying to convince all the brands to work with us, and all of that took time and was a challenge. And that's again part of the kind of the entrepreneurial dynamics, where things aren't always easy, and you've got to adjust, and
Pivot.
you gotta like, add more features to be able to
Yeah.
generate additional revenue streams. But in hindsight, it was amazing, because we make good money from that side of things. And so obviously revenue growth
Yeah.
becomes much more stronger. And then you start to look at, okay, when's the now inflection point for us to now go out and raise more capital, because
Yeah.
we have huge ambitions in terms of how we want to disrupt the mortgage market, but also the way people manage household debt, whether it's,
Yeah.
credit cards, student loans, car finance. There's 44 million people in the UK with some form of household debt, and who wants to be in debt, paying their lenders, in crazy amounts of interest.
Yeah.
And so, so now in the market again and again, building out the network, and kind of, I think having strong traction and having
Yeah.
a strong team really obviously makes a difference,
A lot
because
easier.
there's a lot of businesses out there that will never be able to really, kind of disrupt kind of traditional
Yeah.
industries, and they're better off being bootstrapped. Like, ours is obviously a little bit different.
And now you've kind of amazing story, and now you've got to this point where you're kind of looking for more than just the capital. You're looking for a partner within your next kind of large injection of capital to help you to whether it be your marketing or different parts of your business. Can you tell me a little bit more about that? That now you've kind of got to a state the size you're at. What are you looking for, and what how have you found working and speaking with the family offices and the venture capital firms compared to the networking and the fundraising that you've done to date?
Yeah, so like historically, most of I've got one institutional investor, but generally all my investors so far have been individuals. And but I've got like individuals that have a lot of them are very well connected. So I've got an investor who's the chief investment officer at St James's Place, or once someone is on the board of Money Supermarket, or the CMO of Pension B. So really people that are useful, and I can obviously go on and those people have been kind of really helpful, because when you have some challenges, you can kind of pick up the phone and say, hey, what do you think about this, or can you introduce me to XYZ? And that's been kind of super helpful. But obviously we're a consumer brand, and I feel like there's a huge amount of space, especially in the mortgage industry. There, I don't feel like there is a real consumer champion out
Yeah.
there. And for most people, their mortgages is like their largest household commitment.
Yeah.
And so having people, and especially investors who have familiarity with building consumer brands, that is obviously very helpful. And so like the investors that we're currently talking to, two investors in particular, I'm not going to name them, but they've got a very consumer focus,
Yeah.
and that's great because ultimately, on the technical side of things, we're very strong.
Yeah.
On the kind of the operational side of things, we're also very strong. And so on the consumer side of things, I have a banking background.
Yeah.
So the more ammunition we have, the more expertise we have, the better, I
Yeah.
think. Yeah.
And how have you found kind of raising money in this environment? Are you finding that obviously you've got the traction, so that's a great help, but are you finding it, yeah, how are you finding it? And what would you say to any founders who are looking to raise money at the moment?
Well, I think with interest rates increasing, good for Sprive in terms of like more and more people are like laser focused on their mortgage, because rates have increased, and so the cost of a mortgage is much more expensive. But on the flip side, in terms of raising capital, with interest rates being higher, there's different places where people can deploy their
Yeah.
capital. Before, I think when interest rates were very low, people were chasing returns, and so investing in private companies was kind of there was just more people willing to do that. And then I think there's been people who invested back in I was talking about 3-4 years ago in lots of private companies, and some of them haven't seen returns. Maybe some of them invested in crypto businesses because
Yeah.
there's a big kind of moment where everyone thought that crypto was going to kind of revolutionize, and a lot of those companies were gonna do well, and they haven't had successes, and so
Yeah.
people get a little bit nervous about putting more money
Yeah.
into private ventures. I think there was a huge focus on like getting to profitability.
Yeah.
And so before, there were businesses, and especially in the fintech space, who raised enormous amounts of capital, and they were like growing their team, but were, in terms of like the amount of money they were making very little money.
Yeah.
And so their outlay might be in the 50 to 100 million kind of mark, but their revenues were less than 5 million.
Yeah.
And so that kind of sentiment is really like starting to like leave the market, and they're looking for founders who are creating real businesses
Yeah.
that ultimately will be profitable, and they're taking capital to grow the business but in a very sustainable way.
Yeah.
And so that's the way we always ran our business.
Yeah.
I'm a big believer of like financial models, and very early, and I think a lot of entrepreneurs don't do this, is they don't look at the financial models and look at the levers of like how much is it going to cost to acquire a customer, how much is it going to cost to keep the customer, retain the customer, how much revenue are you going to make,
Yeah.
what's your payback period, look at the cash flow. And people just think about the problem and the
Yeah.
solution. And I'm a firm believer that if you get into the weeds, if the numbers make sense,
Yeah.
then you can build
there.
out from there. But if
Yeah.
the numbers don't make sense, then you're just fooling yourself and you're fooling investors, etc.
Yeah.
And so I think there's a lot more focus now on not only the vision and the team and all of that stuff, but on the fundamental kind of unit economics, and making sure that is solid. And there were a lot of investors, I'd say, in 2024 that were like holding on to capital,
Yeah.
and kind of seeing we had two elections this year,
Yeah.
obviously the US election and the UK election, and so people kind of waiting to see what the backdrop of that was, because obviously economic and political uncertainty really interlinked. But also it was an opportunity for like companies that are run badly to exit the market, and
Yeah.
I've seen great founders who weren't disciplined with the cash, run out of cash,
Yeah.
couldn't raise, and now they're no longer around. And so I think it's a great signal. And I'm starting to sense that the market's picking up.
Yeah.
But again, I think it's probably harder than it was 2-3 years ago, for sure.
Yeah. And a lot of the big brands that we know today, they've really focused, particularly their founders, on their own personal branding and getting themselves out there. And you guys are on a really exciting personal branding mission yourselves. Can you tell us a little bit about what you're now looking to do in 2025 in terms of making yourself that household name?
Yeah, so I mean, ultimately, we feel like most homeowners would probably like the idea of being able to like pay off their mortgages quickly and save interest. And we've got customers on track to save like, 50,000, like I said, but like not 10 years off your mortgage. Like the difference between paying off your mortgage at 60 versus 50 is like life changing.
Yeah.
And it's great we can do that. But a lot of the growth that we've had so far is word of mouth. So people literally down the pub telling their friends and family, you should check out this app.
Yeah.
It's helping me kind of pay off my mortgage a lot more quicker. I've done all my Amazon shopping during Christmas and look how much
Yeah.
interest I'm on track to
Yeah.
save. And that's been fantastic. But we feel like now's the time to really next year in 2025 is to become more well known
Yeah.
and really invest in marketing. And so like we just recorded a TV ad for Sprive, which we're really excited about. So you should be seeing us on TV across different kind of channels, the streaming channels and kind of terrestrial channels, and really trying to get the word out there
Yeah.
because we feel like there's a lot of people we can help. And the beauty of Sprive is you're not sacrificing like your lifestyle. You're just by doing things that you would do anyway.
Yeah.
You'd be amazed at the impact it can have. And so we'll do a lot more brand awareness
Yeah.
and then use the brand awareness to like funnel in customers and then partnerships. Like there's a few partnerships, really exciting partnerships that I can't really talk about.
Yeah.
But again, doing partnerships to be able to like again get more
And
people
increase that exposure.
increase that exposure and get more people to essentially help them on their journey to being mortgage free.
Perfect, thank you. And just wanting to take a step back now to kind of your early days in your childhood and your relationship with money. How's that how do you think the way that you were brought up, we touched on your entrepreneurial family, but actually money behaviors has that had a big impact on how you run your own personal finances?
Yeah, I mean 100%. My because my family didn't come from money, especially when I was very young. My dad was still starting his business. I saw him. He used to work till midnight every night, having multiple jobs. And so my parents used to also always tell me we don't have
Mm.
a lot of money. And so like I never grew up getting birthday presents or like Christmas presents. They'd give me presents when I did well at school. So if, for
Okay.
example, I accomplished something that they thought that was very impressive, suddenly maybe a Game Boy would turn up, but it'd be like one present a year. And I still remember the time when I got that and I valued it so much. And so I'm not very like consumerism isn't really part of my DNA.
Yeah.
I'm very very like I find it hard to like spend money on myself,
Okay.
on other people, maybe like my family, and I'd
Yeah.
rather do that than like buy myself like nice clothes and nice gadgets. And so I think from that perspective, that's really shaped me, especially my entrepreneurial venture. I'm always thinking about how, and where we spend money and is it value for money
Yeah.
and can we do more with less?
Yeah.
And a good example is we created a Sprive India subsidiary because we wanted to hire really talented developers. But one of my co-founders, we discussed it, and we were both in London. We decided that he would relocate to India because he's got family in India,
Amazing.
and then we hired amazing developers in Bangalore, but it's at a fraction of the cost of being able to hire developers in the UK. But
Yeah.
also, they're also amazing.
Yeah.
So they're on the ground. We have an office. They're not outsourced, but
Okay.
it means that we can build faster than most fintechs, but also much more capital efficient.
Yeah.
So we can have like 6 or 7 developers, and it costs us like £11,000 a month.
Compared to
Compared to
having.
if I did them here, I mean, it'd be eye-watering the amount
Yeah.
of money. And then obviously, if your cost base is very, 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 very high, then it becomes puts a lot more strain and be able to
Yeah.
actually cover your costs and get to profitability. And so we're very ruthless. Obviously, frustratingly sometimes, my marketing team especially always, can we spend more? And
Yeah.
and what I found it's really easy to spend money.
Yeah.
And so it's important about being hyper disciplined,
Yeah.
setting budgets, keeping to budgets.
Yeah.
And I'm a firm believer that every single payment goes through me in terms of approval. It doesn't matter
Yeah.
how small. And like I think
And
we talked
keeping that
keeping that discipline, even like
discipline,
the invoices,
certainly.
paying invoices and all of
Yeah,
that
and
stuff.
feeling that when you're
Yeah,
paying it,
and then
that it's
exactly,
coming out.
and then dealing with my accountant and making sure I'm all over the numbers and
Yeah,
looking at the financial model and saying, look, the financial model said we're going to do this. This is what's reality.
yeah,
Then tweaking the financial model so that we stay in step with
yeah.
reality. All of that,
Really
I
important.
think all of that kind of stems from my childhood in terms of like being managing money and not having a lot of money to begin with.
Yeah,
And I think that helped. And I think that helped me partly to help me pay off my mortgage.
yeah,
Like I think if I was really like frivolous when I was in my
yeah,
twenties, I wouldn't have had enough to like pay off, have a deposit. And then even when I had my home and we had the deposit and we borrowed like £300,000, in 4 years we paid that off. And like there's a lot of people who would have been on the same income levels as me and probably had the same sort of debt profile, but they didn't have that kind of aggressive mindset where
yeah,
we're like, we're going to get rid of this. And that meant we still went on holidays but again, we were like cutting back. We could
yeah.
have spent that money, but we didn't.
And what's next for Sprive? Like, what's your goal in terms of you personally with the business?
Yeah, I mean, for me, it's very much first of all, kind of getting as many people across the kind of the homeowner community in the UK to and help them with their kind of managing their mortgage. It's a free app, so I'm like I like to think it's a no-brainer. And there's 11 million homeowners, so I feel like there's a lot of people we can help. I really want to partner with banks to help people get better mortgage deals. I feel like at the moment, if you get a mortgage, it can take 8 weeks to like remortgage. A lot of paperwork, a lot of like information you need to like manually like provide a mortgage advisor or your lender if you go direct. A lot of the kind of the pricing around mortgage deals are very, very traditional. So you might have two individuals with very different income profiles, but they have a loan to value, which is basically how much equity you have in the property, being the same,
Yeah,
somewhere between like say so between 75 and 80%. Then you get access typically to the same mortgage deals
yeah,
and the same interest rate, but actually the income profile and the credit risk profile might be very, very
very different.
different. So why can't the person who's got slightly better affordability get an even better rate? And so can we do
Yeah,
custom pricing? So there's all these kind of like underwriting process for banks is very, very manual. There's like a typical bank will have 3,000 people managing the underwriting process. Do they need to really in this day and age be able to have such a kind of a traditional process? So I feel like there's a lot of things we can do from technology
yeah,
to help customers and banks essentially win on both sides. I have this kind of passion that why should it just be mortgage holders that essentially become, get on their kind of road to becoming debt free? Why can't we help people with student loan debt or credit card debt or car finance debt? And so like I mentioned, like
yeah,
we've got like students who've got like who are now at Sprive, and they're not really students, and they're kind of in their early 30s, but they still have the student loan debt and they're paying
yeah,
like 12% interest on that.
yeah,
And they come to me, and I've so many people come to me saying,
yeah,
"Can you help me with my student loan? Like build
yeah,
Sprive for student loans."
yeah.
So I think we,
It's crazy. I have a student loan,
yeah,
and I started working, and it was like 42,000.
yeah,
And I checked it the other day, having been paying it for nearly 10 years, and
yeah,
it's something like £54,000.
yeah,
So
yeah,
you haven't even scratched the surface
exactly, yeah,
of paying that off. So yeah, if you can build something for student loans, send it my way.
yeah. So we could,
And we can do that. So a couple of last questions from me. But outside of work, obviously being a CEO, running a business is incredibly difficult. How do you manage the stress and the pressure, and take some time for yourself?
yeah. I mean, because it's challenging. I think it's obviously the business is all encompassing, and then you have like a family. I have a family. I have two young boys, and so you also want to be there, and then you also want to make sure you've got a little bit of time for yourself.
Yeah,
And so obviously I've got some good friends. I try to like interact with a few founders.
okay,
We're all kind of going through similar journeys, and so
yeah,
kind of sharing war stories and kind of helping each other. I think is nice. In terms of just kind of with kind of like helping with kind of the mental resiliency side of things. I do have once kind of I switch off and clock off for the day, I do try to have like at least an hour where I'm got my headphones on and I'm watching something on like one of the streaming channels,
yeah.
just like a TV series, just to be able to like
Switch
just kind
the
of
brain
switch
off.
off, switch the brain off
Yeah,
before I kind of head to I kind of go to sleep and then kind of get up and then obviously back to it and
yeah,
kind of hit the pedal. But I think mental health is huge.
yeah,
I meet so many founders that because it's a roller coaster
yeah,
and you need to like look after yourself. And so every founder has a different way of being
yeah,
able to just make sure that they are good on those sort of things.
yeah,
And for me, it's family. and taking a little bit of time out. But I think the best thing for a founder is if the business is going well, then you feel absolutely amazing. And so, touch wood, our business is in a good place. And so
And it's honestly super
so,
exciting
so that kind of that helps.
journey.
Yeah.
And what do you think is the biggest thing you've learned about yourself on this journey?
Biggest thing I've learned about myself, that I think the resiliency side of things is sometimes you do surprise yourself in that you think, like, I used to think working at a place like Goldman Sachs was tough because you're working with amazing people, very talented, very driven, and I always felt like I did well there. I always performed well, and so you have this kind of like I'm doing really well, but also it's challenging. You're working in a really challenging environment, and then you go and do your own thing, and it's 10 times harder.
Yeah.
It's like people don't understand. Like sometimes, like you go for a drink with an old colleague, and they're like, "How's it going?" And they really don't understand the kind of the mental pressures and the resourcefulness, the day-to-day dynamics, and how, like, you're not just doing a task that you suddenly get very well at and very good at, like, being able to do. You're 1 minute you're doing something around finances, next minute you're doing something around regulation, next thing you're doing something like a partnership thing, next thing you're on a podcast. Like, it's so varied. You're on a TV shoot recording recording a TV ad, and you're an extra in the background, like all these different things. It's so varied, and you're solving problems that no one else has, and you're connecting dots, and so many meetings are just they don't account to anything, but you just don't know unless you take the steps and you try. And so I always love problem solving, but I feel like you kind of recognize once you kind of gone through the journey that actually you kind of surprise yourself, and also, like, every day you incrementally make progress. So when the years pass and you look back, you're like, how do we do this? Like, how do we have, like, we're supporting billions of pounds worth of mortgages, processing millions of pounds of payments. We work with, support 14 of the largest lenders in the UK. We work with 65 tier A brands. Like, when you step back, that incremental daily day, you're like,
amazing.
What have you achieved? And it's you don't realize that when you're going through the journey, but when you look back, you have those moments where you're like, okay, that's pretty cool.
Pretty amazing. Well, thank you so much for your time today. I've absolutely loved chatting to you, and I have no doubt that you will be a huge success and on all of our TV screens next year, which I'm super excited for. So thank you.
No, thank you for having me, Frankie.
Thank you.